and welcome to ECCB Connects. This week we'll be looking at one of the critical functions of the economy, the electronics payment system. We'll also be examining an interesting question: is cash dying? I have with me Salvador Perez-Galindo, Vice President for Government Relations, Latin America and the Caribbean, Visa. Salvador, we've been hearing a lot about cash. Is cash still important? Is cash dying? So tell us, is cash dying?
It is, and thank you for the opportunity for being here. Let me just briefly comment on why we're here and on why we believe the future is to become increasingly less cash. Probably we won't see the extinction in our generation, but we do believe that the trend is to reduce the usage of cash. For us, for Visa, it is very important to contribute to economic growth and competitiveness by providing a domestic improvement in how payments are made. And if you look for the past few years, there's a secular trend to steadily reduce the usage of cash. There are many advantages associated to moving an economy to electronic payments, both from a broader society-wide perspective and on an individual basis as well, for consumers and merchants, how to make life easier, more convenient, more secure. And there's a convergence in interest from both the public sector and the private sector. At the end of the day, we believe it is a win-win proposition for every society to use less cash. Technology is also forcing the usage of electronic payments, and I will make just one very concrete statement on why we believe the usage of cash will be increasingly reduced. Digital commerce. Right now, the main channel for conducting trade is not going to a mall, to a traditional shop. It's through the internet, online. If you look at the statistics, and these are not Visa-specific statistics, general statistics, the growth of online transactions are double-digit growth for the next 4 or 5 years, whereas physical transactions, traditional stores, is only 1-digit growth. If you see markets in China, for instance, most of that trade is now conducted from a smartphone. Obviously, the desktop is still important for conducting e-commerce, but in the emerging developing markets, it's really everything through a mobile device. And if a country is not prepared to conduct those transactions online, it won't be able to compete in the 21st century. The only way to compete in this century, in this world, is through electronic payments.
And our people have begun to accept this, because more and more we're having the use of ATM cards, debit cards, credit cards, as you said, online shopping. But we're now hearing about digital currency. Explain that to us.
Digital currencies is a new term, which in reality it has been for quite a while. In the case of Visa, we have been in existence for more than 50 years. When we started, it was also a digital currency. So the concept has evolved, and obviously the means, the devices to conduct transactions are evolving. Nowadays, many people think of Visa as the traditional plastic credit card, and we're not. We're still obviously using the infrastructure that allows the credit card industry to start, but the digital currency is actually the way to conduct digital commerce that I was mentioning before, through a smartphone, through a desktop, or even through a phone, a device, just putting it instead of a card on top of a POS terminal. You have now all these emerging features of an Apple Pay, Samsung Pay, Android Pay, and all are based on a so-called digital currency, which at the end of the day is basically an electronic means of transacting.
But we've been hearing terms such as bitcoins, e-wallets. Explain in particular bitcoins.
Right. The landscape is becoming increasingly complex with the emergence of new players, new technologies. And Bitcoin, the technology behind Bitcoin is just emerging. The specialists call them cryptocurrencies because it's more than a digital currency. It's a technology that it's there. It's still in a very early stage, and it's posing significant challenges to regulators around the globe. Cryptocurrencies are definitely an interesting feature, but I think we're still far from seeing them becoming mainstream in the consumer day-to-day activity. So we would prefer to talk about electronic means of payment that have been recognized by regulators, that are under proper oversight by regulators, and that's how we operate as a system. There are new emerging models outside of the traditional world, but that's definitely a different business model, and it's not something that we're seeing impacting the day-to-day life of consumers.
In our region, the Eastern Caribbean Currency Union, we're still pretty much a cash-based society. What do you see then as the hindrances that will affect the full implementation of an electronics payment system?
That's the main challenge for many of our countries in the region. You're absolutely right. Probably 70-80% at least is conducted with cash. In the English-speaking Caribbean, the Spanish-speaking Latin American countries, in general, we see the same challenge. And that's why, as a company, we are very committed to working closer with authorities, with governments, because this is not going to be an easy path, an easy evolution. We believe it's a secular trend, like I mentioned before, but we need to accelerate it if we want our economies in the region to be competitive. If we compare where we are in the region with developed markets in Europe, North America, Asia, we're still far behind. And this is an intrinsic competitive feature for our economies. And public policies can play a key role in terms of displacing cash. Cash has a cost. Unfortunately, for many consumers, stakeholders in any economy, cash is free. There's no cost associated to it. So we need to start raising awareness that it's not free, that it costs the society. It has a cost in terms of tax collection, tax revenue, money laundering, and ultimately even violence and crime. With an electronic society, you can reduce, if not eliminate, you can reduce many of those illegal activities that are traditionally associated to cash. So to respond very, very concrete to your question, it's we need to partner as an industry and as a government to provide the conditions for consumers and merchants to start reducing less cash in their everyday activities.
So we spoke about the hindrances. On the flip side of that, what elements in our society do you see as promoting the acceptance of electronics payments?
There are many hindrances or barriers, and beginning with education, with financial education, in some instances financial inclusion, to the extent that the society is not aware of access to electronic means of payment, that they still use their debit cards for ATM withdrawal. Somebody who receives the wage every 2 weeks or every month and go immediately to the ATM to withdraw the full amount and then go shopping, it's completely inefficient. The same applies to a recipient of a welfare of social benefits that these days most developed countries are giving it through an electronic means of payment. There's no need to continue reproducing that cycle. So that's why I'm bringing the public policy side, because to the extent that there's awareness on the consumer, the government itself is preaching with the example, distributing benefits, allowing payment of taxes or fees through electronic means of payment, which can be or not a card transaction. There are many different ways of electronifying an economy. We will face an uphill battle as an industry. The industry has to help as well, and we have new business models, new technologies. These days, it's very simple to accept a card. with a smartphone, you can add a little device, and it transforms a smartphone into a point-of-sale terminal. So whether it's an independent professional, a small mom-and-pop shop, most of these players already have access to smartphones. As we know, the penetration of smartphones is very significant, in some cases higher than the penetration of financial services. So if we can link the technology part with the basic financial service of having an account, because you cannot conduct electronic means of payment if there's no type of account behind, where it's savings, checking, salary account, or a credit card, you won't be able to transact. So we managed to plug the two aspects of technology and financial services. We believe we can overcome some of those barriers.
You spoke about the importance of agencies working together, public policy, the government, but what is the role of the citizens in this?
Well, obviously, it's the critical aspect that the citizens change their way of conducting transactions, that they really see a benefit, that they perceive a benefit in shifting from cash to an electronic means of payment. And at the end of the day, it's convenience, and it has to be a clear value proposition for citizens to change their habits. And that's probably the hardest thing to do, to change habits which have been here for years or even centuries, using paper and coin to transact transactions. So it's a process, an evolution, but to the extent that, as I was mentioning before, the citizens start feeling that they have the technology in their hands. We know how the millennials, the new generation, is increasingly using and revolving their lives around a smartphone. It's going to make easier for the citizens to start transacting with electronic payments. It might evolve a little bit of a generational shift, but I think we should not expect, and there should be no generational gap with electronic payments. The youngest generation, the oldest generation, all can perceive very concrete benefits. And just to give you an example, it's well known sometimes that retirement payment or social benefits might entail a lot of time simply going to cash. Cash is literally the word, your benefit, whereas you could be spending that time doing other activities. The consumers will feel there's a difference. There's no need to be spending hours in front of a teller or a government office to receive something that they could do it in a different way. So we're convinced there's a value proposition, and as long as the citizens see the benefit, we believe they will change their habits.
You recently concluded a workshop with financial institutions in the Eastern Caribbean Currency Union. How then do you see the electronics payments taking off in the region?
That's a very good question, because at the end of the day, the devil is in the details. So we have been talking about very general issues, but the key question is how can we accelerate the usage of electronic payments in the Eastern Caribbean? And we are still relying a lot on the cross-border international transactions being more electronified than domestic. Domestic meaning the transactions conducted by nationals from the Eastern Caribbean. From an international company perspective, we want to make a difference in those day-to-day transactions that citizens in this region are conducting still primarily with cash. So the workshop was very helpful to start an engagement with the ECCB and with other government stakeholders on what specific projects or tasks we need to work with. There was an interesting discussion, for instance, on how to improve also acceptance of electronic payments by the tax authorities. Also, how to allow a faster and easier way to conduct person-to-person transfer of funds. From one island to the other, it might be quite painful to be sending money to relatives or to conduct business. And our platform is there. It could make easier all those transactions happening from one island to the other. And we consider the currency union for us as a single payment space. So there's no barrier from a commercial perspective to really integrate all the islands into a common space, which is the word I'm using, to really facilitate all those transactions regardless of the geographical barriers. And it was very useful at the end of the day to start working on very specific projects. We want to do the follow-up with the authorities, and we're hopeful that sooner rather than later we will see some impact here in this region.
Salvador, thank you very much for speaking with us on ECCB
Pleasure.
Connects.
Thank you for your time.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
Limit your urge to swipe that credit card unless you pay your credit card bill in full each month. Don't use it for anything you can eat or will. You're watching ECCB Connects.
To view any episode of ECCB Connects, anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
We've come to the end of another episode of ECCB Connects. We thank you very much for watching and invite you to join us again next week for another program.